The broadcast is now starting. All attendees are in listen-only mode.
Hello, everybody, and thanks for joining us today in our Webinar Wednesday series as we go through the DFARS, the Defense Federal Acquisition Regulations. We appreciate you guys taking time out of your day to join us. And again, this series is complimentary. It's every Wednesday at 12 p.m. We'll run through the end of the year, covering all parts of the DFARS. All of the webinars are recorded and they're posted on both our website and our YouTube channel. You can find the PowerPoints on slideshare.net. Those are also complimentary. Our speakers are subject matter experts, attorneys, consultants. Today we've got two great folks from Cohen Resnick, but we'll get into that in a moment. First, we want to thank our sponsors. The Virginia PTAC is the Procurement Technical Assistance Center. They are housed over at George Mason University. This is the headquarters for the entire state, and they offer one-on-one counseling, training classes, various events, both online and in person. I think they're doing now to help burgeoning federal government contractors. So we want to thank them for helping to promote our webinar series and working with us on many of the webinars that we do. We also want to thank our friends over at Set Aside Alert. This is run by Tom Johnson. It's a daily email that lets business owners know of RFP and RFQ announcements that are set aside for small, women-owned, veteran-owned, hub zone, and all the other designations. If you have questions or you want to sign up for their newsletter to get these alerts, contact Tom Johnson. You've got his email address there at the bottom of your screen. Oops. Also, our friends at the Greater Reston Chamber of Commerce have one of the best government contracting organizations in the DC metro area. Their GovCon Council meets the third Tuesday of the month at 8 a.m. You've got the link there to register. You can also contact Alicia Field. Her email address is there on the last line of the slide. And I'm not sure if those are in person or virtual these days, but you can contact Alicia for more information. One of our other sponsors is C3 Integrated Solutions. They provide CMMC services, which is pretty hot topic these days. So contact C3. I don't know if we have a contact name there for you, but their email address is there at the bottom, c3isit.com. Karen Vasquez or Bill Wooten are your contacts once you get to their website. We also want to, last but not least, thank our friends over at Workplan. They provide an ERP software program for contract management and accounting. You've got a phone number there in your top right corner. You can request a demo or just jump onto their website for more information. Okay, a quick blurb about us. We provide professional services for federal contractors. This includes product, service, and software companies. We also perform market analysis reports for companies of all shapes and sizes, proposal writing, pricing, GSA schedule services, 8A certification, contract compliance administration, a little bit of everything. We offer these services a la carte. Our website is jennifershouse.com, and you can contact us at hello@jennifershouse.com if you want additional information or just to jump on a call for a consultation. Second Friday of every month, we've been hosting in 2021 these GovCon QA Cafe webinars. Each month has a different topic. There are 4 subject matter experts who will answer your questions on that specific topic after they've made a short presentation. So next month, which is not too far away, we're covering the topic of set-asides. November, we get into pricing, and we'll close out the year with mergers and acquisitions. This is a paid webinar series, $35 a pop. If you want a discount, plug in the code DFARS for a $15 discount. So our speakers for October 8th, which again is the second Friday of the month, we've got Anna Ehrman over at the State Department, Cy Alba, Tim Fern and Eric Coffey, who will join us. November, we cover pricing with Marcia Lindquist, Stacy, Jeff Shapiro, I believe is a colleague of our speakers today, and Michael Gallo. Mergers and acquisition in December, that's December 10th. Shirley, Kate, Brad, and Joshua will be delving into that topic. Again, you can use that code DFARS to get a $15 discount. I would be not doing my job if I failed to mention our October 1st Fiscal New Year Best Practices webinar. We've got some industry leaders and influencers who are going to be talking about the following topics: market research, marketing, sales and capture, proposal writing, and compliance. We've got 2 government folks confirmed, SBA, who's going to be our opening speaker, and then GSA will close out the webinar. There are limited seats left for this. We've got capacity for 500. This is online. And I think we're up to about maybe 420 folks that have registered. So use that attendee registration link if you want to grab a seat. It's complimentary. If you want to sponsor, the sponsor fee is $450. Okay, now that we've been through all that, I want to introduce our speakers. First up, we've got Teresa Gonzalez, then following her will be Catherine Zablonsky. So Teresa, I'll let you say a couple words and I'll move over to the next slide for Catherine.
Thank you, Jennifer. So hello, everyone. As mentioned, I'm a manager with CohnReznick in our government contracting practice within our advisory group. I've been with CohnReznick just a short time, just starting this year, but have been loving it and just love the people I work with and everything that we do. But prior to joining CohnReznick, my time was spent in industry, working with various organizations. My roles within those organizations consisted of financial analysis, budgeting, forecasting, pricing, and contract administration. So I'm very excited to be here today to provide more insight into DFARS Part 242 and really hope you all enjoy the webinar.
Great, thank you, Teresa. And Catherine, over to you.
All right. Thank you. And good afternoon, everybody. Obviously, welcome to the DFARS Support 242 webinar. We're excited to be here. As Teresa mentioned, we are joining you from CohnReznick. And for those of you who may be unfamiliar with CohnReznick, we are a national professional services firm and the 11th largest accounting firm in the United States. Our firm has 3 overall lines of service, providing services around assurance, tax, and advisory services. As Teresa mentioned, we sit within the advisory practice and more specifically within our government contracting practice. My name is Catherine Zablonsky, just to reiterate that. I've worked in government contracting for both in industry and consulting for the past 9 years of my career, and prior to that, I actually worked in human capital. So my consulting experience over the last several years of my life have really been focused on government contracting compliance, from accounting and other various business systems, government contracting, providing false claims and government litigation support, and really just overall general government contracting industry items that we can be of assistance with. I'm obviously excited to be here today, and we're happy to be joining everybody and hope that everybody enjoys the webinar.
Great, thank you both for the introduction, and we're really excited to have you guys here with us today. This is a hot topic, contract administration. And this is part of DFARS 242. So I'm just going to move to the next slide and then just holler when you're ready for your next slide, please.
Sounds great. Thank you. So jumping into things here for DFARS 242, really, as Jennifer had mentioned, that it covers that contract administration piece. Within that DFARS section 242, there are 15 subsections, which Teresa and myself will cover throughout the presentation today. We're going to be going over them from a high-level perspective, so we certainly encourage everybody to reach out to us with any questions that you may have or follow-up comments or discussions that need to be had from some of the things that we're presenting today. I just want to note here that the 242 is written really with various different subparts, as we mentioned. They're not necessarily in a chronological order, so therefore you're seeing us start with DFAR 242.2, simply how the regulation is written rather than an omission or oversight on our end. So kicking us off into this DFAR subpart 242.2, which is the assignment of contract administration. This first section is really covering that government contractors for certain types of DoD contracts can elect to delegate responsibilities of contract administration to someone within the Defense Contract Management Agency, also known as DCMA. And really that's going to be in accordance with your DFARS 201.602-2, that the contracting officer representative or the core will be able to designate and sign off from the contracting officer to perform technical admin support functions for the contract. Some of those administrative functions really include that the DoD activities shall not retain any contract for administration that requires performance of contract administration functions at or near contractor facilities, except for certain types of contracts. So some of the high-level ones that we've seen in our past are National Security Agency, research and development for universities, flight training, and there's a whole number of different types of contracts that can fall into this category that are listed within the regulation itself. Subpart 2 here really covers contract administration functions from a base and post camp and station contract from military installation, which are normally responsibility of the installation or tenant commander itself. Part 3 covers DCAA being able to provide pre-award survey assistance for those post-camp and station work performed on those military installations. And then to avoid any type of duplication, Part 4, Subpart 4, really focuses on contracting offices shall not be located with their personnel at contractors' facilities. You can go ahead and go to the next slide. All right, so 242-3 is contract administration office functions, which covers the various different office functions that can be completed by that designee that we were talking about. So it's important to note here that contract administration services performed outside of the United States should be performed in accordance with FAR 42-301 unless there's no policies in there covering a particular given situation. Really, in that case, coordination proposed actions with the appropriate U.S. countries or teams are going to need to be had. So the administration functions include ACO responsibilities with regard to receipt of an audit report, identifying any type of significant accounting or related internal controls deficiencies, which there is another subpart further in the presentation, which we're going to go over that specifically. Additionally, the administrative functions can include contract administration functions related to IR&D and BMP projects, certain delegations or potentially lack thereof for payment administrations in accordance with applicable payment clauses, responsibilities on contracts for ammunition and explosives, support programs, offices, and buying activities in pre-contractual efforts leading to a solicitation or award, serving as that single point of contact for single process initiative management council activities, which can include the negotiation and execution modifications of agreements. DCMA also can have the responsibility for reviewing and earned value management systems, which we're going to get to later on in this presentation as well. And ensuring that implementation of synchronized pre-deployment and operational tracker, also known as SPOT, by the contractor and maintaining the surveillance over that contract from a compliance perspective. Additionally, they can maintain surveillance over contract compliance with trafficking and persons requirements for any DoD, or I should say all DoD contracts for services incorporating particular FAR clauses that relate to this topic. Approving or disapproving contractors' business systems as it's identified in clause 252.242-7005, which again, later on in this presentation, we're going to cover all the different variations of the contractor's business systems. Certain monitoring of contract costs can be performed, as well as reviewing and audit contractors, identification of contractor approved suppliers for the acquisition of electronic parts as it's identified and for certain FAR clauses. They can also issue, really navigate issues for negotiation and executive orders under those basic ordering agreements for overhaul, maintenance, and repairs. Next slide.
All right, let's talk about the post-award orientation, DFARS 242.5. So a post-award orientation aids both the government and contractor personnel to achieve a clear understanding of all contract requirements and identify and resolve potential problems. This orientation is not a way to alter any final agreements or substitute the understanding of the work requirements. DFARS 242.503 specifically addresses the post-award conference procedure. There's a DD Form 1484, and it is a form that can be used by the person in charge of the post-award conference and in preparing the report. According to FAR 42.503-3, the form should be submitted to the contracting officer, the contract administration office, the contractor, and other interested parties. This form was established in 1986, and from what I could tell, there were no instructions offered on how to fill out the form online, or at least what I was able to find. So I assume if you do have any difficulty filling out this form, you can work with the person in charge of the post-award conference on any questions you have. For contracts that include the clause at 252.234-7004, cost and software data reporting, post-award conferences shall include a discussion of the contractor's standard cost and software data reporting, or what's also known as the CSDR, process that satisfy the guidelines contained in the Department of Defense 5000.04-M-1 CSDR manual, and the requirements in the government-approved CSDR plan for the contract, DD Form 2794, and related resource distribution table. DoD 5000.04-M-1 provides the primary requirements document for the development, implementation, and operation of the contract cost data reporting and software resources data reporting systems, which are collectively referred to as the cost and software data reporting system. The DD Form 2794 is the cost and software data reporting plan, and I did see that the instructions for completing this form are available online. All right, next slide, please. All right, DFARS 242.6, so the Contract Administrative Contracting Officer. When a contract has more than one operational location, such as a division, plant, or subsidiary, there can be corporate-wide policies and procedures that require government approval and could affect the work of more than one administrative contracting officer, or ACO. When this happens, it may require an assignment of a corporate administrative contracting officer, also known as the CACO, who would deal with the contract management and perform contract administration functions on a corporate-wide basis. A CACO may be assigned when the contractor has at least 2 locations with resident ACOs, or the need for a CACO is approved by the agency head or designee. One of the resident ACOs can be designated to perform the CACO functions, or a full-time CACO can be assigned. When determining the locations of the CACO, such factors as locations of corporate records, corporate office, major plant, cognizant government auditor, and overall cost effectiveness are taken into account. Decisions to initiate or continue a CACO assignment may include, but are not limited to, volume of government sales and degree of control exercised by the contractor's corporate officer over government-oriented lower-tier operating elements. The responsibility for assigning the CACO is determined by a couple of things. If all locations of a corporate entity are under the contract administration cognizance of a single agency, that agency would be responsible. Or if all locations are under the contract administration cognizance of more than one agency, then the agency shall agree on the responsible agency. DCMA maintains the Federal Directory of Contract Administration Services components, and it lists the names and telephone numbers of those DCMA and other agency offices that offer contract administration services. You can refer to FAR 42.203 for the link to the website which provides this information. The responsibilities of a CACO include, but are not limited to, determination of final indirect cost rates for cost reimbursable contracts, establishment of advanced agreements or recommendations by corporate home office expense allocations, and administration of cost accounting standards, also known as CAS, that are applicable to the corporate level in corporate directed accounting practices. Next slide, please. All right, 242.7 indirect cost rates. DFARS 242.705 refers to final cost rates after settlement of the final annual indirect cost rates for all years of a physically complete contract. This DFARS section was added because contracting officers were initiating their own review of incurred cost audits and not accepting that DCAA determined that the contractors were low risk and that the contractors' contracts can be closed without a formal audit. This section states that under DoD Class Deviation 2012-0013, which is DCAA's policy and procedure for sampling low risk incurred cost proposals, which was issued on July 24th of 2012, that for purposes of satisfying audit requirements, Department of Defense contracting officers shall continue to rely on either a DCAA audit report or a DCAA memorandum documenting that, based on a risk assessment and a proposal adequacy evaluation, DCAA determined the incurred cost proposal to be low risk and did not select it for further audit. In order for a proposal to be low risk, the contractor must meet the following 3 conditions. First, DCAA must have performed at least one previous incurred cost audit on the contractor. Second, no significant question costs in the prior year's audit. And third, DCAA must not have any audit leads or other significant risks identified, such as any known accounting system deficiencies that could have an impact on the final indirect rate proposal for the fiscal year being submitted. These rates shall be established on the basis of the contracting officer determination at 242.705-1 or auditor determination procedure at 242.705-2. The corporate administrative contracting officer and individual administrative contracting officers shall jointly decide how to conduct negotiations. For any organizations that are not subject to contracting officer determination procedure would fall under the auditor determination procedure. You can refer to FAR 42.705-1 and 42.705-2 for additional information regarding when the contracting officer is responsible or when the auditor is responsible. Section 242.771 implements 10 United States Code 2372, payment to contractors for independent research and development and bid and proposal costs. The regulations state that expenses incurred for independent research development shall be reported independently from other allowable indirect costs. The costs incurred are allowable indirect expenses to the extent that they are considered fair and reasonable. Defense contractors are encouraged to engage in IR&D and B&P activities that are reliable and of potential interest to DoD. Some examples of these activities that are of interest to DoD include enabling superior performance of future U.S. weapon system and components, reduce acquisition costs and lifecycle costs of military systems, and enhance the industrial competitiveness of the United States. You can also refer to DFARS 231.205-18, which includes additional examples. The cognizant administrative contracting officer or corporate ACO shall determine the following for IR&D and B&P: the cost allowability, determine whether the projects performed are of potential interest to DoD, and notify the contractor promptly of any IR&D, B&P activities that are of no potential interest to DoD. Next, Catherine will discuss DFARS 242.8, disallowance of costs. We can go to the next slide.
Okay, 242.8, disallowance of costs. For those of you who may be unfamiliar with what that term means, the disallowance of costs is really common within the government contracting world, and some of you obviously may be familiar with that term. Essentially, it means that the government, for either regulation or other reason, can choose to disallow a cost from being invoiced to the federal government. In this particular section, there's really a couple of elements that are being covered here. We're looking at things like the contracting officer receipt of those vouchers, and really what that means, and more so focused on from a cost reimbursement type contract. There's some invoicing procedures that are referenced at 225.807-5B, which do have to be followed. And really, when we look at those items, there's 2 roles that are sort of being played here, right? We've got the auditor's receipt of the voucher, but that means that there's a contract auditor and there's an administrative officer that's associated with that. So on the auditor receipt of the voucher side, the contract auditor is the authorized representative by the contracting officer for receiving those vouchers from the contractor, making sure whether that's electronically or by whatever delivery method makes the most sense in terms of meeting the contract terms. They have the right to be able to approve those interim vouchers that were selected using whatever sampling methodology for provisional payments or sending them to disbursement offices for prepayment. Reviewing completed and final vouchers and sending them to the administrative contracting officer, and then issuing that DCAA Forms 1, Notice of Contractor, contract costs suspended and or disapproved to deduct any costs that may have from allowability perspective be questioned. The administrative officer, contracting officer side focuses on approving all completed vouchers and sending them to that disbursement office, as well as they may issue the direct issuance of the DCAA Form 1 on any cost when there's reason to believe that they should be suspended or disallowed. Next slide.
All right, thank you. All right, so DFARS 242.11 discusses production surveillance and reporting. Production surveillance is a function of contract administration used to determine contractor progress and to identify any factors that may delay performance. Production surveillance involves government review and analysis of contract performance plans, schedules, controls, and industrial processes, as well as the contractor's actual performance under them. Under DFARS 242.1104, the Cognizant Contract Administration Office shall perform production surveillance on all contracts that have a criticality designator A or B contracts. Surveillance shall not be performed for those contractors, with a contract that have only criticality designator C unless specifically requested by the contracting officer. Criticality designators are a degree of importance to the government and assigned by the contracting officer to the supplies or services. Contracting officer shall assign a criticality designator to each contract in the space for designated the Contract Administration Office as follows. A criticality designator A is for critical contracts, which include a DX rated contract, contract citing the authority at 6.302-2, which is unusual and compelling urgency. And this states that the agency's needs for the supplies or services is of such an unusual and compelling urgency that the government would be seriously injured unless the agency is permitted to limit the number of sources from which it solicits bids or proposals. Full and open competition need not be provided for. A DX is a rating provided by DPAS, which is the Defense Priorities and Allocation System. This is the highest rating and takes priority over DO rating, and DO takes priority over an unrated order. If you have any contracts, pay attention to any DPAS ratings, as these contracts are to be administered and made a priority within your company. Criticality designator B is for contracts other than those designated as A, for items needed to maintain a government or contractor production or repair line, to preclude out-of-stock conditions, or to meet user needs for non-stock items. Criticality designator C is for all contracts not designated by A or B. When information on contract performance status is needed, the contracting officer may require contractors to submit production progress reports. These reports are limited to information that is essential to government needs and shall take maximum advantage of data output generated by contractor management systems. DODI 5000.2, which is operation of the Defense Acquisition System, provides for reporting requirements for defense technology projects and acquisition programs. If FAR Clause 52.242-2, production progress reports, is used in contracts, the following instructions should be included. The frequency and timing of reporting, which normally is 5 working days after each reporting period, contract line items, exhibits or exhibit line items requiring the reports, offices, which include address and codes where those reports should be sent, and also including the contract office and the contract administration office. Requirements for report context should also be included, such as the actual or potential problem and the cause, items and quantities affected, and when the delinquency either started or will start. Next slide, please. All right, innovation and change in name agreements. This always is a fun topic, I think. DFARS 242.12 prescribes the policies and procedures for execution of novation agreements and change of name agreements by the responsible contracting officer. If a contractor wishes the government to recognize a successor in interest to its contracts or a name change, the contractor must submit a written request to the responsible contracting officer. The responsible contracting officer shall either identify and request that the contractor submit the information necessary to evaluate the proposed agreement for recognizing a successor in interest or a name change, notify each contract administration office and contracting office affected by a proposed agreement for recognizing a successor in interest, and provide those offices with a list of the affected contracts, and also request submission of any comments or objections to the proposed transfer within 30 days after notification. Any submission should be accompanied by supporting documentation. PGI 242.1203 provides instructions on where the agreement should be sent and what should be provided in each request, including listings of affected contracts accompanying a notice of successor and interest, and lists of affected contracts accompanying a notice of name change. And for those of you that are wondering what PGI stands for, it's a Procedures, Guidance, and Information. A novation agreement is unnecessary when there is a change in the ownership of a contractor as a result of a stock purchase, with no legal change in the contracting party, and when the contracting party remains in control of the assets and the party is performing the contract. When it is in the government's interest not to concur in the transfer of contract from one company to another company, the original contractor remains under contractual obligation to the government, and the contract may be terminated for reasons of default should the original contractor not perform. When considering whether to recognize a third party as a successor in interest to government contracts, the responsible contracting officer shall identify and evaluate any significant organizational conflicts of interest. If the responsible contracting officer determines that a conflict of interest cannot be resolved, but it is in the best interest of the government to approve the novation request, a request for a waiver can be submitted. When a novation agreement is required and the transferee intends to incur restructuring costs, the cognizant contracting officer shall include the provision provided in DFARS 242.1204, which states that the transferor and transferee agree that the government is not obligated to pay or reimburse either of them for, otherwise give effect to, any costs, taxes, or other expenses, or any related increases, directly or indirectly, arising out of or resulting from the transfer of this agreement. Now, next slide, please.
All right, so contractor performance information. So DFARS 242.15 is just that, right? That covers the contracting performance information, which specifically covers by policy past performance evaluation and the contractor's performance assessment reporting system, which is their CPARS rating. This also includes the assessment of the contractor's performance against and any efforts really to achieve the goals identified in its comprehensive small business subcontracting plan when the contract contains certain clauses for small business subcontracting plans. In addition, and related to this topic, really contractors should be focused on looking at the DoD class deviation 2013-00018 past performance evaluation threshold and reporting requirements, which was issued on September 24th of 2013. That class deviation establishes the threshold for past performance reporting on DoD actions and really requires that past performance reporting for contracts awarded under certain FAR clauses such as 8.6 and 8.7 when the threshold is in that class deviation are exceeded. The class deviation also encourages the contracting officers to manually register and complete assessment reports on science and technology contracts and delivery and task orders, which are under various different budget accounts that are over $1 million. The deviation will remain in effect until incorporated to DFARS or subsequently is rescinded. Next slide, please. Contractors business system, so 242.70. This is probably one of my personal favorites to cover. So just starting off from a high level perspective and looking at it from a definitions perspective and where this may be applicable to contracts. First off, the key terminology around this is really going to be around acceptable contractor business systems and contract business systems. Those are going to be defined in the clause of 252.242.7005, which is that contractor business systems clause. Going to be defined for only certain types of contracts as applicable for those particular clauses, which includes covered contracts. And really what a covered contract means is the contract that's going to be subject to the cost accounting standards, which is under 41 USC Chapter 15 and implemented by regulations found in 48 CFR 9903.201-1. Ultimately, these reference clauses for each business system covers and whether or not a system is acceptable or potentially has significant deficiencies. So an acceptable contractor business system means just that. The contractor business system complies with the terms and conditions that are set forth within the regulation, and all the conditions and terms are met for the applicable business system clauses. A non-compliant or a system with significant deficiencies means that the significant deficiency is a shortcoming within the system that materially is going to impact or affect the ability for the officials at the DoD to rely upon information that's being produced from that particular business system. So represented on the slide here, we've got 6 business systems that we're talking about. Taking it sort of from the top in more of an alphabetical order, accounting systems is really looking at the contractor system or system that are used for those accounting methodologies, procedures, and controls in either to establish, record, or classify, analyze, summarize, interpret, and present accurate, timely financial data information, and making sure that that information complies with applicable laws, regulations, management decisions, and that includes any subsystems that may be applicable to that specific system. And those are things like indirect and other direct cost, compensation pieces, billing, labor, and general information technology. Estimating systems, which are the contractor's policies, procedures, and practices for being able to budget and plan controls around generating estimates of cost for other data that's going to be proposed or submitted with a proposal to its customers, and the expectation of hopefully receiving award of that contract. The estimating system includes the contractor's organizational structures, delegation of authority, duties, responsibilities, internal controls around that review process, flow of work, coordination, budgeting, planning, estimating, all the techniques that really help to accumulate information and historical information that can be leveraged to generate those cost estimates. The purchasing system is a focus on the contracting system or systems for purchasing and subcontracting, which includes make or buy decisions, potentially selection of vendors, analyses for quoted prices that they may receive from vendors, negotiation of pricing with vendors, and placing the administration of orders and expected delivery of those materials. Property management is the property management system and the contractor system for managing and controlling government property. EVMS, also known as Earned Value Management or Earned Value Project Management, is a project management technique for measuring project performance and progress in an objective manner. And then materials management, which is Materials Management and Accounting System, and then AS is reviewing the contractor's system or systems for the planning, management, and costing of materials, which is used in the manufacturing process, which also we will go over later on in greater detail in this presentation. In general, the contractor shall and should have and establish and maintain an acceptable business system in accordance with the terms and conditions of the contract, where these particular clauses are there in your contract. If it's noted to have significant deficiencies, there are a number of iterations that the contracting officer with the contractor will go through in terms of responding or making an initial determination of deficiencies, allowing the contractor to be able to respond to the deficiencies, and allowing for the withhold of payments to sort of be remedied throughout the process. So when the contracting officer makes a final determination to disapprove a contractor's business system, the contractor officer has to identify one or more of the covered contracts that we defined earlier from above containing this particular clause of 252, 242, 7005, for which payments will be withheld. That payment threshold for various withholds can be varied and applicable to certain contracts, just dependent upon the particular situations and with the regulations being incorporated into that. Payments can be withheld from contractors or contracts identified in writing, and that's going to also be in accordance with that 252, 242, 7005, until the contracting officer has made a determination that there are no remaining deficiencies. The contracting officer also reserves the right to be able to take action with the terms and conditions within the contract. After the consultation happens between the contracting officer and an auditor of functional specialist for monitoring the contractor's progress in correcting the deficiencies, the contracting officer shall notify the contractor of any decisions to decrease or increase the amount of payment withholdings. So correcting of significant deficiencies. If the contractor notifies the contracting officer that the contractor has corrected the significant deficiencies, the contracting officer shall request the auditor or the functional specialist to review the correction and verify that those deficiencies have since been corrected. Prior to the receipt of that verification, the contracting officer can discontinue withholding payment pending verification of that receipt and may release any payments that were previously withheld. If at any time the contracting officer determines that the contractor has failed to correct the significant deficiencies, which had been identified in the contractor's notifications, the contracting officer can continue or can reinstate or increase withholdings from progress payments and performance-based payments and direct the contractor in writing to continue to do so. So all to say, it's very important to keep compliant business systems, especially if these are obviously covered within your contract. Next slide, please. Voluntary refunds. A voluntary refund is a payment or credit and adjustment under one or more contracts or subcontracts to the government for a contractor or subcontractor that is not required by any contract or other legal obligation to do so, which requires procedures to be followed in order to be able to properly handle that voluntary refund. The procedures essentially cover that there's really a number of steps here. It's a voluntary refund may be solicited, so i.e. that's requested by the government, or it could be unsolicited. Before any type of solicitation of voluntary refund or accepting an unsolicited one, the contracting officer should have legal counsel review the contract and related data to confirm that there are no readily available contract remedies already in place, and advise whether the proposed action for that voluntary adjustment would jeopardize or impair the government's rights. The other item is requesting voluntary refunds should only happen when the contracting officer concludes that the contractor overcharged under a contract or inadequately compensated the government for the use of government-owned property, or inadequately compensated the government in the disposition of a contractor inventory. Also, and the retention of the amount in question by the contractor or subcontractor would be contrary to good conscience and equity. They ask that you don't solicit voluntary refunds without approval of the head of contracting activity as providing department agency regulations. Voluntary refunds can or may be requested during or after contract performance, and contract modifications rather than a check is going to be for the preferred methodology and means of effecting a solicited or unsolicited refund transaction before final payment. Next slide.
All right, so DFARS 242.72 discusses the contractor material management and accounting system in a little bit more detail. So a couple slides ago, Catherine gave a high-level overview of all the business systems, so this part just dives into the material management and accounting system. So the material management and accounting system, or the MMAS, means that the contractor system or systems for planning, controlling, and accounting for the acquisition, use, issuing, and disposition of material. Material management and accounting systems may be manual or automated. They can be standalone systems or integrated with planning, engineering, estimating, purchasing, inventory, accounting, or other systems. Policies and procedures within this subpart apply only when the contractor has contracts exceeding the simplified acquisition threshold that are not for the acquisition of commercial items and are either cost reimbursable contracts or fixed price contracts with progress payments made on the basis of costs incurred by the contractor as the work progresses under the contract, and they do not apply to small businesses, educational institutions, or nonprofit organizations. DoD policy is that the MMAS reasonably forecasts material requirements, ensures the cost of purchased and fabricated material charged or allocated to a contract are based on valid time-based requirements, and maintains consistent, equitable, and unbiased logic for costing of material transactions. The cognizant contracting officer shall determine the acceptability of the contractor's MMAS and approve or disapprove the system and pursue correction of any deficiencies. As part of the evaluation of the system, The contractor's MMAS will be determined if it complies with the requirements at DFARS 252.242-7004. A MMAS review will be conducted when the following conditions are met. A contractor has $40 million of qualifying sales to the government during the contractor's preceding fiscal year, and the administrative contracting officer, with advice from the auditor, determines if the MMAS review is needed based on a risk assessment of the contractor's past experience and current vulnerability. Once the review is completed, the auditor will submit a report to the contracting officer. If there are no significant deficiencies, the contracting officer shall notify the contractor that their MMAS is acceptable and approved. If there are one or more significant deficiencies due to the contractor's failure to meet one or more of the MMAS system criteria at the DFARS clause, the contracting officer shall notify the contractor in writing, providing a description of the deficiencies found, and request the contractor to respond within 30 days. Once the contractor has responded, the government will evaluate the response and make a final determination. The final determination will state that the MMAS is acceptable and approved and no deficiencies remain, or significant deficiencies remain and either disapprove of the system, withhold payments, or request the contractor to correct any deficiencies within the next 45 days. Next slide, please. All right, DFARS Clause 242.73 goes over the contractor insurance and pension review. The ACO is responsible for determining allowability of insurance pension costs in government contracts and for determining the need for a contractor insurance pension review, CIPR. DCMA and DCAA auditors assist COs in making these determinations, conduct CIPRs when needed, and perform other routine audits. The review is an in-depth evaluation of a contractor's insurance programs, pension plans, and other deferred compensation plans, and related policies, procedures, practices, and costs. An in-depth CIPR will only be required when the following two conditions are met. A contractor has $50 million of qualifying sales to the government during the contractor's preceding fiscal year, and the ACO, with the advice from DCMA insurance pension specialists and DCAA auditors, determine if a CIPR is needed based on a risk assessment of the contractor's past experience and current vulnerability. Qualifying sales are sales for which certified cost or pricing data were required under 10 United States Code 2306A, or that are contracts priced on other than a firm fixed price or fixed price with economic price adjustment basis. Sales include prime contracts, subcontracts, and modifications to such contracts and subcontracts. When a government organization believes that a review of the contractor's insurance pension program should be performed, that organization should provide a recommendation for a review to the ACO. If the ACO concurs, the review should be performed as part of an ACO-initiated special CIPR or as part of a CIPR already scheduled for the near future. The ACO responsibilities include, but are not limited to, determining the need for the CIPR, requesting and scheduling the reviews with the appropriate DCMA activity, notifying the contractor of the proposed date and purpose of the review, and obtaining any preliminary data needed by the DCMA insurance pension specialist or the DCAA auditor. The DCMA insurance pension specialist is responsible for issuing a technical report on the contractor's insurance pension plans for incorporation into the final CIPR report based on an analysis of the following: the contractor's pension plans, insurance programs, and other related data, leading the team that conducts the review and advising administrative contracting officers and other government representatives concerning contractor insurance pension matters. The DCAA auditor is responsible for participating as a member of the CIPR team or serving as the team leader and providing the following. First, issuing an audit report for incorporation into the final CIPR report based on an analysis of the contractor's books, accounting records, and other related data, and performing contract audit responsibilities related to cost accounting standards administration. Next slide, please.
All right, so DFARS 242.74, technical representation at contractors' facilities. So program managers may conclude that they need technical representation on their contractor facilities really to perform those non-contract administrative services, technical duties, and to provide and be the liaison for guidance and assistance on the systems and programs. The technical rep is a representative of the DoD program of the system office performing non-contract admin services or at or near a contractor facility. And I just want to call out here, and specifically within the guidance, it says that a technical representative is not a representative of the contract administration or contract audit component or a contracting officer's representative. In these cases, where program managers may be assigned a technical representative under the procedures in 242.7401, the following will be followed and may include when the program and project or system manager determines that a technical representative is required, the manager is going to issue a letter of intent to be the contract administration office commander, listing the assignment locations, the starting and ending of the assignment date, technical duties that are going to be assigned, a delegation of authority components, and support required for that contract administration. Any issues regarding the assignments of that technical representative should be resolved promptly. However, final decisions on the assignment remains with the program manager. Issues regarding that assignment of a technical duties in nature that cannot be resolved between the program and office and on-site DoD contract administration office will be elevated. Number two, a part of those that are being followed when assigning that technical representative under those procedures that we referenced is that the program and project or system manager will furnish the designated technical representative a letter for assignment of delegation on the technical duties, which are copied to that contract administration offices and the contracting officer and the contractor at least 30 days before the assignment date or termination date. Any changes to that requirement in the assignment of that letter are going to be made by a new letter of intent and processed in accordance with the paragraph we just referenced from up above. The contract administration office normally provides the technical rep with the office space, equipment, supplies, and any type of part-time clerical support or other support that they may need. The program and project or system manager provides the supervision, technical direction, and administrative services, and when required, full-time clerical support. The program manager or the designee and the contract administration office at the local level are going to be the ones who are going to navigate and negotiate a memorandum of agreement delineating their functions between the administrative interrelationship with the annual updates as necessary. The technical rep is also going to keep the contract administration office commander fully informed of any type of matters that may be discussed with the contractor, and the contract administration office shall also keep the technical representative fully informed of contract discussions that relate to those technical matters, which are in the purview of the technical rep's assigned duties. Next slide. So DFARS 242.75, Contractor Accounting System and Related Controls. Earlier on in the presentation, we talked a lot about business systems, and really which is one of our last slides that we have here, but certainly not the least important slides that we have here, is around this contractor's accounting system and its related controls. So this is going to be applicable to clauses that are covering accounting system and its related controls for contractors who are receiving cost reimbursement, incentive types, T&M or labor hour contracts, or perhaps even contracts which provide for progress payments based on cost or a percentage of stage completion, and who are required to maintain that accounting system based off of that clause that we referenced prior. So the accounting system, just to refresh everybody's memory, is really just the location for which the accounting is going to be performed. It's those method, procedures, and controls that are going to be established to gather and record and classify and interpret information from a financial data perspective, and making sure that the capabilities within the accounting system are to be able to do that timely. It also includes the applicability of laws, regulations, management decisions, and anything from a subsystem perspective that are directly going to impact the accounting system, things such as indirect and other direct costs, compensation, billing, labor, and general information technology pieces. And essentially looking at this is looking at it from a perspective of a few policy such items as maintaining an accounting system, which is obviously that maintenance of all the things that we listed above and making sure that that accounting system stays compliant. The cognizant contracting officer in consultation with the auditor or other functional specialist are going to make determinations as to whether or not that contractor's accounting system complies with the system criteria for an acceptable accounting system as it's prescribed in that clause 252, 242, 7006. It's the responsibility to make sure that the disposition of those findings, i.e. notifying the entity of its findings as applicable. Ultimately, system approval, so the contracting officer is going to promptly provide a previously disapproved accounting system and notify the contractor when the contracting officer determines that there are no remaining significant deficiencies, which we went over a little bit in our previous slide related to the different types of business systems. Contracting officer notification, which is, again, the contracting officer promptly going over the approval or disapproval of the system and making sure that that's clearly and effectively communicated, and that any type of withholds of payments are clearly communicated. And in the event that the decisions are reversed, we can ultimately have that withholding of any type of payments reversed as well. And then simply just mitigating the risk of the accounting system for potential deficiencies for specific proposals and what that means for different types of government contracting. And yeah, so that is everything that Teresa and I wanted to cover on today's webinar. So we thank all of you for joining us. And I know that Jennifer will probably close us out here, but just to reiterate, on the next couple of slides, you'll see our contact information. So if there are any follow-up questions or we can be of any type of assistance from a government contracting business need, whatever that may be, from indirect rates, business system compliance, contract administration, you name it, we do it. We're happy to help in any way that we can. So we appreciate everybody's time today.
Great presentation. Thank you both, Teresa and Catherine. Again, thanks to the audience for taking time out of your day. Everything is being recorded. We'll have the recording up on our website and on our YouTube channel, where you can find over 450 complimentary government contracting webinars. We'll send the slides out to you guys as well, meaning to all the audience, as well as kind of back to our speakers. And that's it. So again, if you guys have questions about today's topic, please contact Teresa and Catherine. Their email addresses are there. I'm sure they're on LinkedIn as well. And we'll get everything out to everybody within about 24 hours. Next week, we're just going down the list here and covering DFARS Part 243, and hope you'll join us for that. Thanks again.